Right now, the IRS is sitting on billions of dollars in unclaimed refunds, and a meaningful share of that money belongs to seniors who simply never filed the right form, or never filed at all, because they assumed they didn't need to. For many seniors who go through the process of checking, the average amount waiting for them is $4,873. That number isn't a marketing figure. It comes from a combination of specific, real sources: missed tax credits, refunds from returns that were never amended, and prior year refunds that the IRS is legally required to hold for exactly 3 years before the money is gone forever. And that's the part that makes this urgent. This isn't money that waits indefinitely. There are real hard deadlines attached to claiming it. And once those deadlines pass, the money does not come back. Ever. Today I'm going to show you exactly where this money comes from, the specific forms that unlock it, and how to check whether the IRS is holding money that belongs to you right now. My name is Lucian Vane. I've spent years studying the intersection of tax law and senior finances, specifically the credits, refunds, and filing requirements that change once you're retired, and that most tax preparers rush through without explaining clearly. The pattern I see constantly is this: seniors on a fixed income assume that if they don't owe taxes, there's no reason to file, or no reason to look closely at old returns. That assumption is exactly what causes this money to go unclaimed. Let's break down exactly where this comes from. Let me be transparent about where this number comes from, because it's important to understand it's not a single check waiting with your name on it. It's a combination of several distinct sources of money that together can add up to this kind of figure for many seniors. Source 1. Unclaimed prior year refunds. Every year, the IRS reports that hundreds of thousands of taxpayers who were owed a refund simply never filed a return to claim it. For seniors, this often happens in years with lower income when people assume, or sometimes incorrectly, that they don't need to file at all. Source 2. The credit for the elderly or disabled, claimed using Schedule R, which is a federal tax credit specifically designed for taxpayers 65 and older, or those who are permanently and totally disabled, and which a significant number of eligible seniors never claim. Source 3. Money found through amending old returns, going back and correcting a previously filed return to claim a credit or deduction that was missed the first time. Source 4. Unclaimed recovery rebate credits. Money tied to the economic impact payments issued in recent years that some seniors were eligible for but never received, often because they weren't required to file a tax return and the IRS had no way to send the payment automatically. Individually, each of these might be a few hundred to a couple $1,000s. Combined, for someone who hasn't filed in a year they should have, who never claimed the Schedule R credit and who missed a stimulus payment, the total can easily reach into the thousands. Let's go through each one in detail, starting with the one that has the hardest deadline. This is the single most important rule to understand in this entire video, because it's the one with a hard deadline and zero exceptions in most cases. Here's how it works. If you are owed a refund for a given tax year but didn't file a return to claim it, you generally have 3 years from the original filing deadline to file that return and claim your refund. After 3 years, the refund is forfeited, not delayed, not reduced, completely forfeited, and it becomes property of the U.S. Treasury permanently. Let me make this concrete with the years that matter right now. As of 2025, refunds from tax year 2021 are either already gone or about to expire, depending on exactly when the original filing deadline fell. Refunds from tax year 2022 still have time, and every year going forward, a new 3-year window opens and closes on a rolling basis. This is exactly the situation that affects so many seniors. A retiree whose income drops significantly after leaving the workforce may have a year, or several years, where their income was low enough that they weren't required to file a tax return at all. But not required to file and not owed a refund are two completely different things. If you had any federal tax withheld from a pension, an IRA distribution, or part-time work income during a year when your total income was low, you may be owed every dollar of that withholding back as a refund. But if you didn't file a return because you assumed you didn't need to, the IRS has no way to know to send you that money. It simply sits there, waiting, until the 3-year window closes. Action step. Think back over the last 3 tax years. Were there any years where you had federal tax withheld from a pension, an IRA withdrawal, part-time work, or any other source, but didn't file a return because your income was low? If so, that return needs to be filed before the 3-year window closes, or that money is gone permanently. The second major source of this money is a federal tax credit that most tax preparation software doesn't automatically check for, and that most general tax preparers don't bring up unless specifically asked. It's called the Credit for the Elderly or Disabled, claimed on Schedule R. Here is who's eligible. You generally qualify if you are 65 or older by the end of the tax year, or if you're under 65 and permanently and totally disabled, retired on disability, and received taxable disability income during the year. But here's where it gets specific and where the credit's real value comes in. The credit amount depends on your filing status and your adjusted gross income, and it's specifically designed to benefit lower and moderate income seniors. There are income limits that, if exceeded, reduce or eliminate the creditee. But those limits are higher than most people assume. The credit itself can range from a few $100s up to $7,500 depending on your exact filing status and income. Though for most qualifying seniors, the realistic range is between $500 and $1,200. Here's why this credit is so commonly missed. Many tax preparation software programs require you to specifically indicate eligibility, and if a preparer is moving quickly through a simple return, this credit can get skipped entirely, especially for seniors whose income is low enough that they might not think a credit applies to them. And here's the part that connects back to what we discussed earlier. If you didn't claim Schedule R on a return you filed in the last 3 years, you can go back and amend that return specifically to add this credit and claim the refund that results. Action step. If you are 65 or older or permanently disabled with taxable disability income, ask your tax preparer directly. Did you check my eligibility for the Schedule R credit for the elderly or disabled? If you prepared your own return using software, search the program for Schedule R or credit for elderly or disabled specifically. Don't assume it was applied automatically. The third source of this money requires a specific form. Form 1040-X, the amended U.S. Individual Income Tax Return, and it is, in many ways, the master key that unlocks the other sources we've discussed. Here's the core concept. If you already filed a tax return for a previous year, but you've since learned that you missed a credit, a deduction, or made an error that resulted in you paying more tax or receiving a smaller refund than you should have, Form 1040-X allows you to go back and correct that return. The most common reasons seniors need to file a 1040-X include missing the Schedule R credit we just covered, missing a medical expense deduction that exceeded the threshold, failing to claim a dependent or caregiver-related credit, or discovering that Social Security income was reported incorrectly. Here's the deadline that applies specifically to amended returns. You generally have 3 years from the date you filed the original return, or 2 years from the date you paid the tax, whichever is later, to file Form 1040-X and claim an additional refund. This means if you filed your 2022 tax return back in early 2023, you generally have until early 2026 to file an amended return for that year and claim any additional refund you're owed. The clock is ticking on returns filed in recent years, and the window is closing on the earliest ones. One important thing to know: filing Form 1040-X does not trigger an automatic audit, and it is a completely normal routine process that the IRS processes millions of times every year. There is no penalty for correcting your own return to claim money you're rightfully owed. Action step. Pull out your tax returns from the last 3 years. Look specifically for whether Schedule R was included, whether all your medical expenses were captured, and whether any deductions look incomplete. If you find something missing, a tax preparer can help you file Form 1040-X to claim the additional refund. The fourth source of unclaimed money connects to the economic impact payments, commonly called stimulus checks, that were issued in recent years. If you didn't receive the full amount you were eligible for, That missing amount can still be claimed through something called the recovery rebate credit. This affected seniors disproportionately for a specific reason. Many seniors who weren't required to file a tax return because their only income was Social Security and it was below the filing threshold. Never filed during the years the stimulus payments went out, and the IRS had no return on file to use to calculate or send their payment automatically. If this describes your situation, you didn't file a return during a year when stimulus payments were being issued and you either received a partial payment or no payment at all, you may still be able to claim that missing amount by filing a return for that specific tax year and claiming the recovery rebate credit on it. The amounts involved varied by which round of payments was missed, but for some seniors who missed an entire round, this alone can represent over $1,000 of the total refund figure we discussed at the start of this video. This is also subject to the same 3-year filing deadline rule we covered earlier, so if this applies to you, time matters. Now let's talk about exactly how to check whether any of this applies to you, because every step I've described starts with the same basic question. Does the IRS have a record showing they owe you money? Step 1. Create or log into your IRS online account at irs.gov. This free account shows your filing history, any balances, and your tax records going back several years. You can see directly whether returns are missing for years you should have filed. Step 2. Request your wage and income transcript from the IRS, which shows every W-2, 1099, and other income document that was reported to the IRS under your Social Security number for a given year, including any tax that was withheld. This is the fastest way to see exactly how much was withheld from pension or part-time income in a year you may not have filed. Step 3. If you prefer to work with a person directly, call the IRS at 1-800-291-040 or visit a Volunteer Income Tax Assistance (VITA) site or an AARP tax aid location, both of which provide free help specifically suited to reviewing prior year situations for seniors. Step 4. If you worked with the same tax preparer for multiple years, ask them directly to review your last 3 years of returns specifically for the Schedule R credit, missed deductions, and confirm whether you received every stimulus payment you were eligible for. Before we close, I want to walk through the most common reasons this money goes unclaimed, because recognizing your own situation in this list is often the first step to actually doing something about it. Reason 1. I don't make enough to need to file. This is the single biggest reason. Low income often means no filing requirement, but it does not mean no refund is owed if tax was withheld from any source. Reason 2. My tax preparer would have caught it. Tax preparers process a high volume of returns, especially during peak season, and specific credits like Schedule R can be missed, particularly on software that requires manually checking a box. Reason 3. I don't want to deal with the IRS. Filing a return to claim money you're owed, or filing an amended return, is a routine, low-risk process. It is fundamentally different from owing money or dealing with a dispute. Reason 4. Simply not knowing these specific forms and credits exist, which is exactly why this video exists. Here is your complete action list. 1. Go back through the last 3 tax years and confirm you filed a return for each one, especially any year your income was low. 2. If you had federal tax withheld from a pension, IRA, or part-time job in a year you didn't file that return now before the 3-year window closes. 3. Ask your tax preparer or check your own past returns to confirm whether Schedule R, the credit for the elderly or disabled, was claimed. 4. Review your last 3 years of returns for missed deductions or credits and consider filing Form 1040-X to amend any return where something was missed. 5. Confirm you received every economic impact payment you were eligible for, and if not, claim the recovery rebate credit for that missing amount. 6. Create your free IRS online account at irs.gov to see your filing history and records directly. This money is not a loophole and it's not a gray area. It is money that was already withheld from your own income, or a credit that Congress specifically wrote into the tax code for people exactly in your situation. The only step between you and that refund is filing the correct form before the deadline closes. If this video helped you, subscribe. Every week I cover the tax credits, refunds, and filing strategies that most seniors only discover after it's too late to use them. Share this with anyone you know who hasn't filed a tax return in a year or two because they assumed it wasn't worth it. It might be worth thousands of dollars to them. I'll see you in the next one.